Good evening and welcome to Live with Shawna at Shaw-Roco Solutions. I'm a real estate investor helping Albertans become homeowners, as well as I work with a group of investors that we work together to create win-win opportunities. And also we work with a team of professionals such as mortgage brokers, realtors, different professionals in their fields, credit repair specialists, building inspectors, insurance companies, property managers. Tonight, I'm just looking at my camera, guys. Sorry, but it's like really dark for some reason. I'm not quite sure why. So we'll try and adjust this. Anyway, sorry, it's a little dark tonight. So tonight, I actually wanted to talk to you about the new mortgage rules that are coming January 1, 2018. What is the stress test that everyone is talking about? And what does this mean to you? So basically, there's what's called the OSFI, which stands for Office of Superintendent of Financial Institutions. So the OSFI requires a stress test in order to qualify for a high ratio or conventional mortgage. So using an interest rate of 2% points higher than the negotiated rate. So back a year ago, last October 2016, any insured mortgages, so like a CMHC mortgage, less than 20% down, you had to undergo a stress test back then to qualify for any of your financing. And the reason they do this is it safeguards the borrower's ability in order to afford mortgage payments if the rates were to go higher. So previously, you would qualify for a 2.5% rate. You would now have to qualify for a 4.5% rate. So 2% was added as what they call the stress test. So here we are now, a year later, and the guidelines again are changing. So that was all of your uninsured mortgages, so 20% and less down. So now what they're doing is they have the new guidelines coming out January 1, which includes a stress test for uninsured mortgages. So any mortgages that you have 20% or more down. So what that means now is that the stress test, the borrowers, you have to qualify for your contract rate plus 2% or the 5-year benchmark rate that's published by the Bank of Canada, which right now is 4.89%. So just to give you some numbers here and make it easier to understand, I know it can be a lot. So basically per $100,000 in mortgages, based on an interest rate of 3.29% amortized over 25 years, your mortgage payment would basically be $488.25. So that's at a 3.29% over 25-year amortization. So next, that's your regular mortgage payment at 3.29. So next, we're looking at the benchmark rate. So the benchmark payment rate would be $575.36 at the 4.89% benchmark with a 25-year amortization. So now you look at that, you got your regular rate, you got your benchmark rate, however the stress test payment will come in. So then the stress test payment is now $598.22 based on a 5.29% amortized over 25 years. So even though you've negotiated, you got your 3.29%, which is great, that's what you have at your bank, you still have to qualify for the 500, the 5.29% is basically how that works. So there's that 2% added. The lenders, how they do this is the lenders determine how much money you can borrow by determining what percentage of your income can go towards your mortgage and your debt payments. So with the new requirements, they'll determine the mortgage payment based on the higher of the benchmark rate or the stress test. Even though, like I said earlier, contract may be 3.29%, this will reduce your maximum allowable mortgage by up to 20%. So here's some examples. So one of the examples I have is a 5-year benchmark qualify rate. So a family with an annual income of $100,000 with 20% down at a 5-year fixed mortgage rate of 2.83%, amortized over 25 years, could currently afford a home worth $726,939. Did I say that right? $726,939. So under the new rules, they now need to qualify for 4.89%. So what that means is now they can afford a home worth $570,970. So it makes a difference of $155,969. So, I mean, that's huge. So that's one scenario. Another scenario, and that's where, like I said, the 2.83%, because the benchmark is 4.89 and it's below, like the 2% would be 4.83, that you could go at the 4.89 is what you qualify for. But again, your contractual rate will be the 2.83. So another scenario I have is where it's 2% above your contractual rate. So a family, another scenario, same kind of scenario, where the family has an annual income of $100,000 with 20% down payment at a 5-year mortgage rate of 3.09%. So now with the 2%, it puts them into the 5.09%. So now your amortization over 25 years, in order to qualify at that 3.9, you would actually be able to afford a home basically worth $706,692. But under the new rules, you now need to qualify for the 5.09. So they've added the 2% to the 3.09. And now you can afford a home for $559,896. So it makes a difference of $146,796. So with that, the biggest thing to know with the stress tests and everything that for people buying homes and so on and so forth that may have qualified, or you're looking for a house and you're in the $700,000 range, and all of a sudden now it's like, oh, okay, I'm going to qualify for something in the $500,000 range. Where it's going to make a big difference for you is just, I guess, look at your priorities and like, okay, I might not be able to be in this neighborhood, but I can qualify for a home in this neighborhood. So at the end of the day, it's just looking and understanding what you can afford and what neighborhood you might end up living in. So that's where it's going to make a big difference. I wanted to just say the information I talked about tonight was provided actually by one of my mortgage brokers. And her name is Laura Sawatsky with the Mortgage Group. And I guess it's kind of a hard topic to talk about, but when it comes to whether you're investing in real estate or you're buying a home or you're going through like our rent-to-own program, whatever the situation may be, it's kind of back to what I've said in previous videos, is that it's very important that you do your due diligence and you team up with a group of professionals, because the professionals are the ones that are going to help you walk through all of this and make sure that nobody wants you to get stuck all of a sudden with a mortgage in a home you can't afford, then you got to go through foreclosure and so on and so forth. So that's kind of what I just wanted to go over tonight, give you some little tips on how the whole stress test is going to work next year come January 1. And that's it for tonight, everyone. So thank you for joining me. And if you're watching the replay, by all means, please type in questions in the comments and I will get back to you. You can also visit me on my website at www.shaw-roco-solutions.com. And I will be back live next Wednesday. Probably a little bit before 7. I'm thinking maybe 7:45. I have a little surprise for you next week. See you then. Take care.